Hello, everybody, and welcome to the Speaking of Insurance podcast. My name is Aaron Bollinger.
I'm Brian Bollinger.
Today, we're going to be talking about things that homeowners or first-time homeowners or rental property owners should be knowing about insurance. Is there anything that you have particularly know, Brian, just starting off?
Yeah, you remember being that first-time home buyer a couple decades ago, unfortunately now. I know someday you'll be one. It's an interesting time because you're so excited. You're looking at your forever home sometimes. You know, you're looking at the schools for your kids. You have all these dreams and all this aspirational things that are happening and juices flowing through your body, excitement, if you will. And, you know, you go and look at these properties and you find one that's in your budget, then you start to make an offer on it. The last thing you think about usually is insurance, right? Unfortunately, that should be one of those things that you are aware of before you, or at least while you're in that process of being able to, rescind or back out of your deal on terms of the property purchase. So things to think about, or things that realtors probably won't tell you, more importantly, are the condition of the roof really matters. They want roofs to be under 20 years old. They want it to be, in great condition. They want the electrical panel to have been updated in the last 20 years also. Things like plumbing, they'd like it to have copper plumbing or possibly PEX piping. They'd like that to be in the last 20 years also. Heating air conditioning systems, same things. And the reason why I think the insurance companies kind of look for some of these systems, because again, I'm not certain the data fully supports the idea that if your plumbing is 21 years old, suddenly it's going to break. I think it's just there's a correlation there that also shows that there was somebody taking care of the property. Not just painting it, making it look pretty, but actually getting in there and improving the systems, the mechanical systems, the heating systems, the cooling systems, these things that, can cost you tens of thousands of dollars. And if you don't ask the question during the purchasing of your home, you wouldn't even think to ask it, obviously, unless you listen to something like this.
Honestly, insurance companies, I think we all, as brokers and everybody, appreciate proactivity when it comes to, your property and whether or not you improve it or not, or if somebody in the past has improved it. So again, those improvements, they do lower the cost, right? And they do increase your likeliness and likelihood of being able to be insured by a good company, right? You might have to go E&S, which is excess and surplus lines, if one of your properties, doesn't meet some of the requirements of the admitted markets, or the FAIR plan, right? If you got 1960s built property in the middle of the wilderness in California, that's going to be a pretty hard thing to insure on an admitted paper, right, Brian?
Yeah, I think that's one of the things too. The school location is really important, but so is location of the property in terms of how close it is to brush. There was a time where 200 feet, insurance companies didn't care. 20 feet, they didn't care. A tree over your roof, they didn't care. For the most part, those days are over. That is long gone. Now they're looking at satellite images. They're looking at the roof structure. We had one company doing flyovers with airplanes, actually using UV filters, look for mold or moss growing on roofs, or missing, little sprinkled, the little rocks that go on the top of your asphalt shingles, looking for those kinds of things. We haven't gotten to the point yet where they're looking at the thermal imaging of the wiring in your home. But again, when you're going this home inspection process, some of these deficiencies can be uncovered. The challenge becomes once you've made the offer, once you've had the inspection, once you've already spent the money for all of these things, now you're at a point where you're very close to having that dream home of yours. And if suddenly you find out that heating system is 30 years old and needs to be replaced, if you hadn't budgeted for that to be replaced, that's something that's going to be really hard for you to recover from. Could take you 10, 20 years to save up to replace that system. And by then, it'd be 40, 50 years old, obviously well need a replacement.
Yeah, proactivity. We always talk about it, right, with our insureds, how it's actually worth it to get your roof replaced once every a couple decades, preferably more often. But obviously, that it can actually increase your likelihood again before of being able to be insured. We actually have this guy who he had received an inheritance from his parents after they had passed away, and I think that he was going to purchase a $10 million home. I think it was around that price because it was a big lump sum of money. And basically, what had happened was, he was going to purchase that home, and then he smartly talked to his broker before he was thinking about going through that entire process. And we quoted him, and it came back at around $40,000-$50,000 or something obscene.
And some of those homes can be six figures. Some of them can really be expensive.
So talking to your broker and realizing that's another added cost, right? It's not just the closing costs, it's not just the broker costs, it's not just these other things that you're thinking about, but also insurance. That's a yearly check that you're going to have to write for, like you say, up to six figures. Something like that is something that you definitely need to consider and talk to your broker about during and before the buying process, not after you've gone through all of those steps, as you had mentioned.
Exactly. And one of the things also that we have to kind of touch on too is just because the last person was paying $600 or $6,000 a year for insurance, doesn't mean that's what you're going to pay. And so a lot of agents and brokers, realtors that is, they say, hey, this guy's got it for $6,000 a year or $600 a year or whatever, don't worry about it. And, people are shocked when we actually have to go out to market and say, hey, this is the condition of this property. What are the options available to them currently today in the insurance marketplace? The numbers can be substantially different, unfortunately.
And that's because of the grandfather policies, right? Like you say, it's just because Joe, for the last 20 years has been getting a handshake deal from farmers that his father before him was able to get, $500 for $1 million in insurance on the property. Just because that has been, capped at how much it can increase doesn't mean that, you're going to be able to get that exact same price. And, that's why not gauging based off of their current experience with the insurance, but actually talking to your broker about how much it would be for your insurance. I mean, there are some things. It's not like a loan where you're able to pick it up or buy it off the other person. Insurance is based on the first named insured.
Yeah, it doesn't transfer like that exactly. And so, these are the things that people need to really be aware of. And so we're trying to just raise awareness that it's the condition of the property, it's how it's been updated. A lot of people with tile roofs are like, hey, the tile will last forever. And the tile probably will last forever. However, there's a waterproof membrane underneath that, and it used to be made out of tar paper. Some of them now are more synthetic or even self-sticking that have a little bit higher, life expectancies on them because they're thicker and more durable. And if they did get cut or punctured, they tend to reseal. The older ones, that tar paper, I compare it to potato chips, basically. After 10, 20 years, that stuff becomes like potato chips. And the really thin stuff that some of these builders put on the homes, unfortunately, in the past, it literally is like one of those Lay's potato chips. You literally take it and you just twist it a little bit in your hands and it just breaks, it crumbles, it falls apart. And what happens is that weight of that tile sitting on that membrane for the last 20 or 30 years and the heat and cold, things move a little bit, right? So some of those micro cracks start to happen naturally. God forbid somebody had to come through and walk on your roof and repair a leak. Now every place they stepped has those bigger cracks, and there's going to be more leaks. There was a story too. Somebody told me once, and I think it's true, is that they had this guy that was doing. He decided they wanted to clean out their chimney, and so they had a chimney sweep come in there and clean out his chimney because they thought, hey, that's going to help the insurance. Which yes, it is something that they do want to see. They prefer you not to use wood fuel for heating, but again, some people do. Point being here. Guy gets on the roof, no problem, cleans it all up, makes a mess in the house, whatever. That part's done, right? But then leaves. 6-9 months go by, rains happen, right? Because that's what happens in the rainy season. It always does. And the guy has like 30 leaks all around the chimney area where this guy was walking and standing. And so then it becomes the question of, and this was a tile roof, but then it becomes the question of, do you just repair that little section, or do you repair more than the section? Do you repair the whole house? Obviously, when it's raining outside, you really don't want to be ripping off tiles or ripping into your roof. You want to be, minimizing the potential for damage in that current situation. But, once you have time to kind of get out there and really get it repaired, I believe in the motto of pay once and cry once. Now, you should get other quotes from people and not just go with the first person that says, hey, I'll do it for 20 grand. May not be the right number, okay? However, that said, at some point you do have to just bite the bullet, get it done, because if you keep delaying, it's not like the problem's going to go away. The roof leaks keep getting worse and worse. You start getting dry rot and mold issues and tons of other things, and you really don't want that in your home. That's just not good for you or the property or the insurance company. Also, just to remind people, a lot of times insurance policies have exclusions on them, and roof leaks are one of those areas that can be an exclusion. And you think about it this way: once you have one roof leak, if you get that one in the same spot, probably not going to be covered. And if it is covered, they're very likely to non-renew you, and then you're going to be stuck with this excess surplus lines insurance companies paying significantly more, in some cases 3 to 5 times more premium than you were paying with your preferred company. So we do want to also encourage people to think about the size of the claims that they're following, they're filing, that is, because again, you file a couple small ones, seems like no big deal, you did pay the premium, of course you did, of course you're entitled to pay it. The problem is, at that point, the insurance company is not required to renew you. And so that's a hidden thing that people don't think about. And it does give the industry a bad reputation. But insurance companies look at 2 things: frequency of claims, severity of claims. And those are 2 things to keep in mind. You start having a frequency issue, even if it's not substantial in terms of how bad the losses are, eventually they're going to non-renew you. You're going to be stuck with that excess surplus lines or fair plan, state coverage plan. And it's just not going to be easy, unfortunately. And it'll probably cost you more than the darn claim did. So it's super frustrating for us agents and brokers to try to tell people, warn people in advance, like we're doing now, Once you filed the 3 claims, we have no time machine. We can't go back and erase them. There's no do-overs. It is what it is. So again, just keep these things in mind.
Yeah, I mean, insurance, like you say, it's like patterns, right? I mean, insurance companies look at the patterns, they run the numbers, right? I mean, they've got the numbers down pretty much to a T. I mean, those who stay solvent, the bigger ones that you hear about on the news, who don't go solvent, they don't have the numbers right. I mean, that's just how it works. And so, I mean, you had mentioned before how the higher price might not be the right price, and I really want to talk about that because you'd also, after that, kind of mentioned the exclusions. And I mean, the higher price might be the right price. I want to clarify, the higher price might be the right price for you in insurance. Just because somebody comes in, at $4,000 and your current broker is at $6,000, there's a bunch of other things that extra $2,000 might be offering you, right? I mean, a relationship with a company, an existing relationship with a company that you've been with for 10 years that's worth sustaining, a relationship with a broker who you've known and trusted for 10 years that might be worth sustaining. Now, if he's going out there and he's getting you a $10,000 quote and the other guy's coming into $4,000 with an equally reputable company and hopefully not as many exclusions, right? Not a lot of exclusions, then that might be worth making the switch. But that extra $2,000, that's a calculated risk that you're taking. You have to understand what that $2,000 that you're actually getting in your pocket entails. It could be higher deductible. I mean, in the event of a loss, that quote that you just got could be a $2,500 deductible. Your current coverage was at $500 deductible. There's your $2,000 savings, right? I mean, then you also have
to... It's complicated. I was referencing, I think, more like the contractors doing the construction, but I totally agree with you. The challenge with insurance is you pay the premium and you want the claims to be handled properly when they get, when they happen. And, obviously there's some people that go too close and they say they want to totally self-insure. They don't buy any insurance at all. And that's totally your right. You can do that. Then there's people that want to have $50,000 deductible or self-insured retention, and you can do that. Sometimes the math works, sometimes it doesn't. There's also some people that are like, well, if I lose all my jewelry, my art, my comic book collection, I don't really need to pay to have that insured because I don't really care about it. But I can assure you, when we get the calls from clients or people that we, come to us after a claim or a loss, they ask us a lot of times, hey, how much would that cost to have that coverage on the policy? And in some cases, it's 1% of whatever the value is. So if you've got $100,000 in jewelry, that means it's $1,000 or $2,000 in terms of cost. And that may be worth it. It may not be worth it. But if you have like large art collections, millions of dollars obviously in paintings or artwork, things to think about. You do need to be aware of these things. And, like in places like California, earthquake insurance is a separate coverage away and separate and distinct from, in most policies, the homeowners policy. So you buy a homeowners policy, it doesn't cover flood, doesn't cover earthquake. It just basically covers fire and theft. I mean, there's a few more things that it covers, but there are exclusions, like things that happen slowly over time, like that roof rot idea where you had that roof leak and it was happening over the last 5 years or 6 months or whatever, and it suddenly became bigger and bigger and bigger. The insurance company, in a lot of cases, is not under any obligation to pay those kinds of claims. And so, it gets really into the specifics of your policy and your needs and your risk tolerance. But a lot of times when it does come to coverage, the ability of the insurance company to pay, the reputation of the company to pay, that is a factor. The FAIR plan, for example, sometimes they struggle to, pay the claims. You got to fight them sometimes. After these big fires in Los Angeles, a lot of people are learning about the fine print in their policies, that they actually had to, replace their personal property before they got the full replacement value of the property. Some of the companies chose to just write blank checks and give it and walk away. So everybody's situation is unique. We can't guarantee also how the companies will respond post-claim. We just work at a high level of reputation, how well they pay the claim. But also, we do have to be aware that, different clients have different risk tolerances. And if you're the type of person that, wants to have minimal coverage or wants, doesn't want replacement cost or something less than that, actual cash value or some other term, there are options sometimes available to you. But again, that's not the sort of thing you just go in and say, give me the cheapest thing. They give you the crummiest coverage, and then it's really not a good fit for you. The goal here is to fit you with the proper insurance, the proper coverage, and make sure that you understand what you're getting. And in some cases, two companies could be $2,000 or $3,000 difference, and maybe that deductible is only $1,000 per claim, and that may not be enough of an incentive to stay with the old company. Whereas, it all depends. Everybody's situation is unique, and you do need to be aware, and you need to go into it and educate yourself. But also sharing, the agent brokers should share with you what some of the exclusions and differences are between the policies.
That's what we like to do as brokers. I think it's one of the most important responsibilities that you have is really, not only just quoting the policies and making sure that the people are getting the best price that's out there on the market, but also making sure they're with the best company, making sure they have the best coverages, right, at least for their certain situations and circumstances. So, I mean, we had mentioned the difference in the replacement cost, right, and actual cash value, or like, you know, the different coverages and different options that the insureds do elect and do have the choice between. And I think a lot of people kind of see the cheaper option of, you know, actual cash value, and they just go ahead and, you know, let's go with that. Do you think that that is ever the right decision, to go with the actual cash value on the home instead of the replacement cost?
Well, the challenge with insurance is you got to get the best coverage that you can actually afford, right? So a lot of people, you know, maybe you do write that policy, but you have them upgrade later. Sometimes people can't qualify for a loan based on the actual best policy form. Maybe it's an extra grand or two a year, and they don't have it in their budget right now. You know, you've got to be able to help people through whatever processes they have. But you do need to be aware that, hey, if this isn't the right coverage for you, or you do need this better policy, you know, you need to try to encourage them to take the better form. Now, and that's the other thing too, right? There's different types of homeowners policies. They have premium, preferred, you know, some of them have gold tier, silver tier, bronze tier. There's even different levels of sub coverages on some of these policies, and things like extended replacement cost. Really important to have that. In California, there's only one company I was aware of that was ever offering recently guaranteed replacement costs, and it was AAA. And so in some cases, I'd have clients, you know, that were with AAA, and we'd be, you know, the same price or maybe even higher than AAA, because AAA was undervaluing what the estimated value was to replace their home, but they were extending guaranteed replacement costs to them. And, you know, as far as we could tell, there was no like co-insurance penalty or some other penalty on the policy. So when something like that happens, you know, that particular situation for those clients that were able to do it, some of those Palisades people, I mean, there were people that unfortunately did suffer some losses. You know, you got to, you know, give your clients the best advice you can, even if it means that not working with you. At least you've given them, you know, your honest assessment of what you would do in the situation, and they can take it or leave it. And in some cases, they might say, well, you know, it's the same price, or it's twice the price, it's twice the coverage. I still want the lower coverage because I want the lower price. But if it's lower price and better coverage, it makes it pretty easy for you to give the client really good advice.
Yeah, I mean, you hit the nail on the head, I think, especially with that last comment talking about, you know, if we do have those companies that, let's say you've been with them for 10 years and, you know, they've been jacking up the rates for a little bit. I mean, Tesla, right, initially out the door, they were giving really good rates on these cars. Now we see them increasing them monthly by, you know, percentages, like 4, 5, 6% every month. I've been seeing that, at least with some people that I know who are currently insured with Tesla. Just because you've been with them for a little bit, just because they're the company that, you know, people that you know use, doesn't mean that they're the best company, doesn't mean that they're the best option out there for you. It also doesn't necessarily mean that they're the worst option for you, but just, you know, talking to your broker. If Tesla has brokers, I don't know how that thing works, but, you know, they have a Grok or an AI chatbot you can talk to, say, hey, right now I've got this, let me ask them, what coverage should I have? You know, I mean, I've got 3 Teslas and all of them are insured with Tesla insurance. There's obviously hypothetical.
Well, one of the things we've learned too with that Tesla set program too, it's even things like when people do the insurance on their own and don't have an agent or broker, even if it's, you know, if you're a business owner, you know, having your commercial person offer you some advice in terms of what limits to carry and how much a personal umbrella you should, you know, consider, you know, purchasing. Like usually it's $3 to $5 million, and, you know, talking about it and saying, well, you know, it's $1,000 a year or $2,000 a year, somewhere in that range to get you to this other level of coverage. So right now you're at $250,000, $500,000. We can add an additional $2 million to $3 million to $5 million of coverage on top of that. You get to a point, and, you know, it's pennies in the dollar compared to what you were paying for your other insurance. Mm-hmm. And then if a claim does occur, I really have anybody complain about having an extra $3 to $5 million of coverage after the claim. Now, paying the premium, I get it, but you get what you pay for too.
You get what you pay for. Value, we preach, and we will continue to preach, is the most important thing in insurance. It is not, you know, the number that's on that premium amount initially. It's what that entails. It's the company's claims handling. It's also the broker you have. If the broker who you currently have, he's not picking up your calls, especially on the commercial side, he's not getting you the certs that you need on time, or she, of course, or they, whatever it may be, right? Your broker is not giving you the service that you need, then that doesn't mean, okay, I'm gonna, you know, stay, or I'm gonna go, right? I mean, it's just balancing that relationship with your broker and the current company that you have, and the price, and what all of those 3 things entail for you and your business. and making sure that you do have a specialist that's on your side, and making sure that you are educated and you're being proactive about educating yourself. If you're listening to this podcast, I think that you're you're a tier above everybody else in terms of insurance education.
Leg up on everybody else, yeah. And the thing too, I mean, the biggest thing here, it's about communication, right? You got to communicate with the insurance company and the agent and broker that you're working with. Make sure you're giving them information like you bought a new car, or your kid just got a license, or some life change happened in your family,
or the home, like we had talked about in the beginning.
Which one?
The new home purchase or new rental.
Yeah, thinking about getting a new home. Again, these are like information that people can give you before you've spent hundreds or in some cases thousands of dollars on a home inspection. Finding out what the insurance premiums might be before you get too far down that path. And understanding like the condition of the property. And them asking, hey, when was the heating system replaced? When was the air conditioning system replaced? When was the electrical panel from? And then, we had some clients recently.
Panels, right?
What's that?
Zinsco panels?
Yeah, there's a few brands out there now. It used to be just Zinsco. There's a few of them now. But yeah, Zinsco panel. Like we've had a couple clients recently like, I got a smoking deal on this property. And then we're like, oh, that's the reason why. And like one of the guys, I think he's spending 30 to 50 grand to have to rewire his small commercial building. Everything else was replaced in the building, it was all upgraded, everything else, but not that one panel, that main feed. And that main feed was on the inside of the property, not the outside of the property. That feed had, aluminum issues, had a bunch of issues, at any rate. And it had a tunnel, it couldn't go overhead. It was just one of these deals. And, the guy's spending a bunch of time, which is one other thing to think about, not just money, but the time away from his business to, go and get this thing figured out and get it fixed. So he's dropping 30, 50 grand where that number is, but he's also lost a couple months of his focus on his business. And so if you're growing the business and you're making 100 grand plus a month or 200 grand a month or $1 million a month, whatever your sales are per month, it doesn't matter. You have to think about it's not just the cost of that, but also the cost of your time. And this is a thing that a lot of people who are self-insuring, who can totally afford it because they're a general contractor, I can rebuild my home, whatever, totally get it. The problem is if and when it were to happen, let's say it was a big wildfire that burned through your area and you're a general contractor in the mountains somewhere, you might have an opportunity to make a ton of money rebuilding a ton of properties, and the last thing you want to do is rebuild your own property. And so having that awareness that this business expense, which is what insurance is, at least on the business side, you can kind of deduct that as an expense, pennies on the dollar, and it allows you to basically continue on with your business, continue on with your life, as much as you can after a loss. Now, homeowners policies are different. People have different needs. But again, I'd say generally most people need to have some level of either property insurance and or liability insurance on their homes and, and or rental properties. And, these things can cost money and they're not free. But again, when you need it, you need to have that insurance.
I mean, the more the merrier, right? The more insurance that you have, I'd say the merrier that you feel, because you feel a little bit safer. And obviously it's a job of your broker to make sure that your time is optimized, like you had mentioned before, your coverage is optimized, and the value that you're paying, right? I mean, the dollar amount that you're paying is optimized. And if you feel like, your rates have been going up unnecessarily and you've been talking to your friends and they got quoted with this new company next door. I mean, for us in Los Angeles County, it's Mercury Insurance Group. You might want to talk to your broker about that company or see if there is a broker that has access to that company, because, I mean, it's a value game.
State Farm, Farmers, AAA again. We're not just saying the stuff that we represent, but again, it's a bunch of different options. And the problem with any insurance market is these companies change their minds. They run hot and cold. And, the challenge really is to find a company that can give you a decent value for a number of years. Because again, when you start changing all the time, especially if you're changing for the lowest premium, you end up getting to a company that may not be making money at some point, and they might pull out of the state or stop writing that type of coverage. And when that happens now, you're no longer grandfathered in with those other companies, and you're having to go out and secure your own coverage. And so, it not all the time look more expensive, but it can be. And so just being aware of the pros and the cons, I think that's crucial, honestly.
And that's, again, a large part job of your broker, a large part job of yourself, making sure that your insurance stays up to date, that you are educated about it, and that you're asking the questions to your broker, and that your broker is able to answer them effectively and tailored to your circumstances. So obviously all of this advice is contingent on your own personal circumstances. We will always preach that more insurance is better, but if you can't afford that, just get what you can afford. Best dollar value we'd recommend.
And honestly too, one thing I want to add to that too, just to make sure we point it out, there's all insurance is a risk transfer. It transfers the risk from one party to another. That's all it does, right? There's also a thing called risk mitigation or risk elimination, which means if you're going to buy a house in the woods and you buy a house that's not in the woods, you've eliminated that wildfire risk pretty substantially, which usually corresponds to saving on your insurance premium dollars. So it may not be the exact view you're looking for with your house, it may not be the exact location you want, but those insurance costs and or the selling price of the property can give you a tremendous lifestyle value too. So these are things for you to consider. We're not telling you what to do. We're here to help, but again, just things to think about.
And if you do want tailored advice to your current circumstances, or you want somebody to take a look at your coverage, we are more than willing to do that. We do have a business email and a website. You can learn more about us, about what we offer. Obviously, this isn't a promotional thing. We're just trying to help here. But if you do, or if you are struggling with that and you feel like, either you can't reach out to your broker's not being responsive, then we can take a look at your coverage and hopefully help you make sense of it. And so I wanted to thank you, Brian, for your time on this and your expertise. Thank you.
Thank you, Aaron. Okay, and again, it's good to get a second opinion, if nothing else, every so often. I'm not saying every week you call up different people trying to get the lowest price on your auto insurance. You don't have time for that, even if it's 5 minutes, right? But you do want to make sure every so often you take a look at the program. 50,000 foot elevation. Do you have enough coverage? Where are the gaps in your program? What are the things that you should be thinking about that you're not? And those are the things I think that a good 5-minute conversation with an experienced team can really help you identify.
And we do have an experienced team, of course, and we do offer that. There are a bunch of other people online. You can search them up on Google, find the ones with the best reviews, and give them a call, and hopefully they'll be able to help you as well with your insurance needs based off your own circumstances. Thank you so much for your time, Brian. Next podcast we can talk about coverage exclusions again. I think that's a bigger topic that we can expand on.
Sounds good. Okay, thank you so much, Aaron. Take care.
Thank you so much, Brian. Have a great day. Bye.
Bye-bye.